I'm going to try to convey to you just how crazy last week's session was, okay? And as we prepare for the upcoming trading week, guys, what I'm going to show you here in this video is how to use price action tools and techniques so that you can see with your own eyes, okay, on this setup right over here, how to look for trading opportunities without using any indicators, how to teach yourself a valuable skill using trend lines, okay, and how to set up your charts to look like this with one click of your mouse. Let's do it. All right, what's up, guys? It's Mark at Dino Trading. Let's get right into this. How crazy was last week's session in the market, right? Volatility just exploded. You've heard me say this before. Trading volatility is a day trader's dream. If you were sitting on the sidelines last week, okay, no offense, but if you were sitting on the sidelines, biting your teeth and getting kind of scared about the volatility, then I'm sorry, all right? I mean no disrespect, but trading's probably not for you, okay? All the day traders that I know killed it last week. It was legitimately one for the record books. Every day last week, we were averaging between 500 to 1,000 points. Yes, I said points, not ticks. Quadruple that if you want to price it in ticks. Just imagine that, 500 to 1,000 points every day, Monday through Friday. I believe the volatility is here to stay. I think this market's going to be very volatile over the next couple of weeks, possibly even months. And, you know, like I said, guys, there's never been a better time to participate in the market. Of course, you got to know what you're doing. You got to be very cautious of risk to reward techniques and profiles. And that's what I'm going to try to show you here in this video using nothing more than a simple combination of trend lines. All right, so first things first, let me go ahead and clean up the chart here a little bit. Let's remove some of that text so we can really focus on and isolate the one, the only, the best signal of the day. I mean, this was the session low, and you know, I'm going to show you how my Super Trendlines predictor drawing tool was able to forecast this exact location in the market. Now, before I get into the details, guys, I want to answer some of the questions I get on a daily basis on some of the drawing objects here. Okay. It appears that a lot of you guys are still a little puzzled or maybe even confused on what are all of these drawing objects? Why are all these colors? Why all these dots? Okay, there's a method to the madness. Okay, so I'm going to try my best here. Before I show you the setup, I'm going to try my best to explain what these drawing objects do and why they're there on the chart. They're there for a reason. They're designed to help you quickly and efficiently pinpoint the exact area where the market may be preparing for a trend change. Okay, I know that's not the first time you guys have heard me say that. You know, I'm a big believer in trend trading. For me personally, there's no other style that's more suited to capture big moves. But of course, to each their own, right? I talk to a lot of scalpers every day. I talk to a lot of indicator traders every day. Love my price action traders, talk to them every day. And, you know, I've reached the conclusion that when it comes to trend trading, you either believe in the theory or you don't, right? You either believe in the ability to transform your chart and, you know, look for low risk, high probability setups using no indicators, or you might be the other kind of trader. And I feel sorry and I feel sad for these type of traders where all you do is rely on your indicator garbage. Okay, I'm not going to get into indicators right now. There are a ton of videos on the channel where I bash indicator traders. So what I'm going to do here in this video is just focus this and try to help you guys educate yourselves on what a good trading strategy actually looks like. So what are all these drawing objects? Okay, let's start with these green dots. All right, that appear to be floating around in space. You guys see all these here? Let me put an arrow on some of them. All these green dots right here. Okay, you guys see this? What do they do? What do they mean? The green dots, guys, are data and drawing objects that are being pulled from a higher time frame chart. Don't forget, the entire theory behind trend trading, the reason that I personally believe in it and why I feel it's so successful is when you have the ability to capture data from one higher time frame chart, you might even want to capture data from 2 or 3 higher time frame charts, right? What that allows you to do is really dig down on a microscopic level, right? And isolate potential areas in the chart where something significant happens on the higher time frame chart, okay? And you're using a smaller time frame chart to participate. Does that make sense, guys? So, again, I don't feel like this concept is too challenging, but if this is a struggle to understand, just either watch the video again or check out some of my other videos that I posted last week. We took a very, very deep dive on how to use multi-trend lines within the same chart. Okay, so anyway, that's what those green dots are, and that's also what these purple trend lines are. This is information that's simply being pulled from a higher time frame chart, or you could have it being pulled from multiple time frame charts. Okay, it's up to you. And the reason that this information is so valuable is because you now have all of the advantages of the higher time frame chart, and you have all of the benefits of a smaller time frame chart, which is what you use to place your stops. Does that make sense, guys? Right? Because on a higher time frame chart, yes, the moves are going to be pretty significant, and you're going to be able to catch some monstrosity moves on a higher time frame chart. But the catch with that method is you also face higher stops, or I should say larger stops, right? Whereas on a smaller time frame chart, automatically you know that the stops are going to be smaller. Okay? That's just a fact. But what I've been able to program here is the ability to capture all of that master data, the higher time frame data, and pop it into the smaller time frame chart. So to make a long story short, you could almost think of it as getting the benefit of both worlds, right? Higher time frame data to predict big moves in the market, and smaller chart data that you use to implement very tight and very small stops. So let's look at the setups, all right, guys? You can see here, here was a purple trend line right over here. It didn't break to the upside, so this is really just an invalid trend line. You're still going to see it on your chart, but there's nothing to do here. Whereas right over here, as you can see here in the morning session, we had a nice purple trend line drawn. The price significantly broke that purple trend line, but that's not enough to start looking for entries, right? We only want to look for entries on the smaller time frame chart. And how does that get illustrated to you? Well, that's real simple. Can you see this green trend line right here? Let's just zoom in. Take a look at this green trend line right here. Can you see, can you guys see the difference between these two trend lines, right? The purple trend lines are connecting pivot points that are floating around in space. That's how you know that these are higher time frame drawing objects. Whereas the green trend line is capturing the smaller chart data. Make sense? And that's why these two anchors have been drawn. That's why you see this trend line, this green trend line properly matching up with the anchors, because the entry happens on this particular setup right over here. Your stop can get placed anywhere from 2 to 4 points right below the most recent swing low. So let's just go ahead and place the stop right there. And you can see that it takes off for a bit. You hopefully get to break even, right? So the whole idea behind getting to break even is to take some of the risk off the trade. And if I squish this in here, you can kind of see that the market does come back a little bit. So this is a really good case study, guys, on what happens if your stop is too tight, right? You kind of have to dance a very fine line on where you place your stops. Some traders are very, very conservative, and they place their stop one tick below the swing low. And if you do that, you have to be prepared that if the market takes off and comes back a little bit, there's a higher chance of you getting stopped out, right? Whether or not you end up losing money on this trade, that's a different story. But nobody wants to be stopped out, right? It sucks being stopped out. So that's why you have to give your trade, guys, some breathing room, right? You don't have to go crazy and put like a crazy, 10-point stop or 20-point stop. I mean, I've seen people do that here on YouTube. All these idiots who are, talking about 20, 30-point stops. To me, that's ridiculous. But again, to each their own. I firmly believe that there's a fine line that you need to straddle when you're figuring out where to place your stops. Okay, so all I can really say is, use your best judgment based on the market that you trade, whether it's futures or Forex, doesn't matter. Just, use your own judgment. But I mean, in this case, here it was, man. Entry happened right here on the green trend line break. Stop gets placed a couple of points below the most recent swing low, and just look at this thing run like a monster. Okay, literally the biggest trade of the day. This was such a powerful trade to the upside. A lot of people who tried to short this market, they got their heads chopped off. And speaking of shorts, I know what you're going to ask me. You're going to ask me, hey, Mark, how did the shorts look? I'm going to show you right now. Watch me do this right in front of your face. All right, watch this. I'm going to right click on the open tab, and to save myself some time, I'm just going to copy and duplicate this exact chart. We're not going to have the drawing objects because we're going to be slapping on the shorts, but this is a quick and easy way to duplicate the exact same chart so that you can quickly pop on your shorts. All right, so I'm going to left click once here. Okay, so a new chart gets open up, and I'm going to quickly slap on the shorts, as you can see right here. Super trend line shorts, guys. All I got to do here is press this checkbox. Okay, you got to make sure you press this checkbox. If you're ever wondering how come you never see any of the drawing objects, well, guys, it's simple. You got to enable the strategy onto your chart first. Okay, so I check this box here, and I'm going to hit OK, and kaboom, just like that, with one click of your mouse, you can see right here, we've slapped on the shorts. And look at the drawing objects. They've been reversed, right? We now see red dots kind of floating around here in space, and we see red short type of trend lines. Okay, so let me squish this in so we can take a look at, the entire setup here. So this is really interesting, guys. All right, this is really interesting on why and how professional traders navigate the market when it doesn't work out in their favor, and how the patient trader will always be rewarded. Okay, so let's zoom in. Can you guys see this? The purples and the reds. All right, let me zoom in here a little bit better so you guys can see this here. All right, so here's the first sequence of setups, and this right here is how this potential sequence of trades played out. Okay, listen, guys, this is the reality about trend trading. You have to be prepared to take a couple of small losses before the big trend reveals itself. Make sense? This is actually wrong. It's actually 40 points here on this winner. So let me quickly go ahead and update this. All right, we want to use accurate numbers here on the losers and the winners, right? So this is the nature of trend trading, guys, all right? As the market's kind of, fishing for a top, the strategy is attempting to predict a trend change to the bearish side. Make sense? So it's going to start taking stabs and attempts in that direction. First one, a quick -6 loser. Second one, a quick -4 point loser. And the third one, a 40-point monstrosity of a winner. And if you missed this one, you can see the market came right back here. And I think we saw, yeah, here was the other one right here. That's where the entry happens on the strategy. Your stop gets placed a couple of points above the most recent swing high. And this thing just ripped for a 60-point winner, right? So listen, guys, here's the wrap up here, okay? Here's the wrap up on how you prepare to day trade every single day. As you know, it comes down to risk management. Like I said, you have to be prepared to eat 6 points, 4 points, 10 points. But you know what the trade-off is? The trade-off is If you know what you're doing and you have professional software at your disposal, then these losers are peanuts compared to the potential opportunity if you do catch that elusive trend. 40 plus 60, you guys don't have to be a math genius to figure out. That's 100 points on the S&P E-minis. Okay? Makes sense, guys. So listen, again, if there's anything that you feel is terribly complicated about this, just watch this video again, check out some of my other resources. And for those of you serious traders out there, if you're looking for a one-on-one demo, I'm happy to set you up. Feel free to either click the link below, register for a demo, or give me a shout, text, call, email. It's all good. Listen, guys, thanks for watching this video. Hoping we can catch a couple of more monster winners next week's trading, and I'll see you on the next